Based on what we've seen out of the Fed, I wonder, are we ever going to see the stock market crash in nominal terms? Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we kick off another exciting trading week. And fortunately, I am joined by trader Jim Paterson, who's running ValOre Metals. And we're going to talk about some of the exciting things happening in the markets today. It's a Monday morning. Quick look at silver, 24.5. And as we will dig into, we'll also take a look at gold right around 1900 today. And we'll get into some palladium. Whoops, that's the old chart. Here's palladium at 22, about 2300, let's call it, which Jim will comment on, and platinum as well at 875-ish, let's say. Although more importantly, Jim, pleasure to have you back on the show. And how are you doing today?
I'm doing great, Chris. It's great to see you. And you know what? You're in good company. Looking behind you there, you've got all your friends with you.
Yeah, well, come on. Well, I don't have you in here yet, but I mean, you and the Arcadian audience, everybody can come on by. It's a Silver Vault is a great place for a party, Jim. You know,
Completely safe.
Yeah, we can hang out here. I actually ordered the first Majestic Silver Cube. It's like these 9 little silver pieces. It looks like you could roll dice with them. So,
wow, cool.
As the saying goes, what can't silver do? And but fascinating times in the markets. And I know last time we were talking option trading when you joined me. But anyway, what are you seeing out there before we dig into some questions? You know, here we are. We got the American election coming up in a couple weeks. Fed's printed a few bucks since you were last on the show. So what do you see happening right now?
Well, I'm pretty focused on the junior exploration sector. So, you know, I'm following all those companies, including the companies in our group, Discovery Group. I am still fairly vested with my hedges, which would be gold, silver, and short the U.S. housing market through the puts on the XHB and puts on the SPY, just in case it goes to hell in a handbasket, which it easily could. However, I've been proven horribly wrong over the last 6 or 7 months in terms of just massive market move upwards. But in the end, my hedge is just a hedge, and I'm super long the U.S. housing market through my own home, and I also own junior stocks. So I actually want a good, robust market. I'm just hedging a little bit just in case.
Yeah, which makes sense and actually leads to an interesting question I've been thinking about. Because I would agree with you, it's like some of these stocks and some of the real estate levels, they seem in bubble territory, yet based on what we've seen out of the Fed, I wonder, are we ever going to see the stock market crash in nominal terms? Because it's almost like, let's say the stock market went down, 2 or 3%. It's like, you almost have to figure Powell would be just like running to the office to get some announcement out. And so I mean, I think that in terms of purchasing power, and if you look how the metals will perform in the long term, but I think that's maybe worth at least thinking about as a possibility, because I think a lot of people are going to say, oh, well, people were saying the stock market was going to crash, and they look at the number and it never does. But what do you think about that one?
Yeah, I think that there's always an ability, if you have control of a printing press, to print paper or share certificates in public companies. So, you know, we actually, as public company players, understand dilution pretty well, perhaps more so than the typical person on the street. Like, you really get it. The more shares that you issue, the less the share is worth. The more dollars that are printed, the less a dollar is worth. You cannot get away from it. And, you know, perhaps the market goes up, but the dollar becomes anemic. You know, if you look at, like, here's an analogy. You look at Australian traded or Australian listed companies. And it's a slippery slope because they look around at their peers in Australia, and those companies, and I'm not joking, can have 1 billion shares and they can be trading at 1/10 of a penny or a penny, less than a penny a share. And so if you look at the market capitalization of that company, it kind of looks normal. But then if you look at the number of shares outstanding, you think there's a mistake. How can a company that is only 1 year old or 2 years old have 3 billion shares? And I think that there are other markets out there. The venture exchange is one where, maybe a US blue chip investor would look at the venture exchange and say, how can this stock trade at 10 cents or 25 cents? This is ridiculous. But, it is kind of jurisdictional, it's all relative, I guess. But the key commonality is printing more of something makes it worth less. And the dollar and the euro and all these guys, the money that's been printed since we last talked has been staggering. And some people understand it, but most people don't. But it blows your mind how they just literally diluted the currency in half.
Yeah. I mean, they printed so much money, the silver price even went up.
That is shocking. Looks like you've got it all behind you there anyways.
Well,
I don't think the general market knows that yet.
Well, I mean, they say, all right, we can sit here, cry about manipulation or do something about it. So, although I think it's nice where, having these conversations where more and more people are getting exposed to what's happened. And something I've found interesting, maybe you could comment on this because I know you're meeting with a lot of investors, is that it seems like, especially with COVID and the Fed's response, that there are even more than I ever remember mainstream people who are watching CNBC and are just scared and saying, okay, now I'm open. Now what these gold and silver bugs are talking about, maybe they did have a point. Are you getting that same feeling too?
I think, what is it called? Confirmation bias? When you're looking for people to agree with you so you can feel smarter.
I mean, and now you got Warren Buffett buying Barrick Gold as well. So yeah, and it's like, now it's like, if you're the fund manager right out of the MBA program, you're like, hey, Warren Buffett was doing it. What are you, and like you said, the confirmation bias.
Yeah, it's great that sort of mainstream and well-known people like that, Ray Dalio and those types of luminaries that everybody recognizes. We're not just talking our own game in our own little circle anymore. Isn't mining great? Gold prices manipulated, all these things, and it's a tight little audience. But when people like that wade into our market, they create a lot of interest. And in terms of not just gold, but other commodities. I've got some friends who are explorers and developers in the lithium market, and they have a project in which Tesla bought an offtake, and their market cap was a couple of $100 million. I don't know the exact number, but the day after that announcement, they traded $2 billion worth of stock. $2 billion, and their market cap was 200 million. So that gives you a sense of how big the audience out there is and how small the mining sector is. And so when the mainstream players and the generalists come into our market, they're not worried about value. They don't even understand value really when it comes on a project by project basis. They just think they need to own it. And that's what causes sort of manias. And we're not there anywhere near there yet in the gold market, the silver market, the lithium market, any of these kind of commodities that are traded. And if you're getting exposure to publicly traded companies and explorers, there's no mania yet.
Yeah,
in my estimation.
I think that makes a lot of sense. And I'm pulling up a chart. It was nice to see, I was listening to one of your interviews this morning. I heard you talking about another market that has had quite a spike, which is uranium. I'm going to get the chart up here. Can you talk about what happened in 2007, where we see here it's trading, around year 2000, $5.61. and then just quite a spike up to, I think got up to about 140 and now back around $29. What was happening there? And is this the type of thing that we may see in some of these markets again?
I think it could. I know more about the market and the pricing of U3O8 from about 2008 onwards. So I wasn't really a market participant. I didn't have conversations with people as those big spikes are happening. However, I do know the person who claims to have sold uranium at the highest price. Go back to that chart and go to the very tip top, and he does still parade around conferences, letting anyone know who asks that he got that.
Yeah.
So he sold that. Anyways, I'm pretty proud of that.
I'd love to meet him so I can get the template. Like, I don't know if one day I'm going to be there. Hopefully, silver finally crosses $50. I'll have the T-shirt. I said it in advance.
I was the one. Yeah. So, but you know what I did see, if you just move it, you know, in particularly in 2010, if you go in there, you know that the price was hovering around in the 40s US per pound of U3O8, and then it just started gapping week by week, and you can see the high there in January. So people mistakenly think that Fukushima was the cause of the drop in price, but the price was already coming off. So, and what was happening in those sort of 4 to 6 months from the summer of 2010 till January 2011 is that, again, very small market, pretty illiquid, and not very transparent. And every single generalist in New York, Toronto, Europe, they were just told by the institutional sales guys at the different brokerage houses that they needed to own uranium stocks, and there wasn't enough either of the commodity available if they wanted to trade it that way, or the junior companies that explored and developed in the sector, and prices went bananas. And you know, it didn't take very long before they tumbled down again. My whole strategy with uranium, because ValOre still holds the Anglac uranium project, which is one of the highest grade deposits outside of Saskatchewan's Athabasca Basin. Outside of that, it's one of the highest, if not the highest grade resources on the planet on a global basis. So it's a high grade deposit with a lot of exploration upside. So we already own a great uranium asset, but I'm in no hurry, because if you look down there, the price is at 29 or 30 bucks. We got lots of time, and we, you know, if it moves like it did back in 2010 into early 2011, we got lots of time to capitalize on that. And until it happens, I ain't holding my breath. And that's just because I've been taught a pretty serious lesson by the market, right?
Yeah, although I like how you mentioned that when everybody started piling in, and that they had, you know, the large institutions had people saying, all right, well, you got to pile in, we need exposure. And then you have a lot of money chasing a small group of assets, which amazingly, we took a look at this one before we started here. Appears to be what is happening on the COMEX for platinum and palladium. Let's see, where is our palladium? I mean, a lot of people have commented on the large numbers in gold and silver. Here is the platinum or palladium deliveries on the NYMEX, 84, 20, 41, 25, 24. I remember back, now keep in mind, this is as gold and silver amounts are skyrocketing, setting historic records. We see 203, I thought that was big. Then we see 570, although perhaps even more exciting in platinum. And actually, I have the Platinum Council coming on the show tomorrow, so it'll be interesting to see what they say about that. Here, 23, 431, 75, 445. Then a 4,000 number in July, 5,600 in October. I did check in with David Jensen and David Morgan, who both more knowledgeable about these markets. They were both a little surprised about these numbers. Again, how accurate is CME data? do we really know what's going on behind the scenes? There's a lot of guesswork in there, but any thoughts on what might be going on there, or what these numbers, Jim?
No, I don't. I don't really have any idea. I mean, I think we don't really know what's behind the scenes. If I just kind of look at even sometimes being behind the curtain of a publicly traded company, and if a large block of stock trades, a lot of people talk, but it sometimes can be moving from account to account, same owner, you know, different, and maybe one person controls two entities, and for tax reasons they're crossing it. We have no idea what this is, but it is a spectacularly large number relative to previous months.
Yeah.
And as you were saying, it's sort of record breaking. And I think that if you like the precious metals and you're into value, I mean, platinum represents that right now. It hasn't traded to, you know, all-time highs. And if you look at the ETFs that track both platinum and palladium, they're very different charts. The platinum, if you track that, it looks like it's been nothing but heartbreak since the thing went, you know, listed in 2011, or when it was trading after the market kind of crashed in 2011. Whereas palladium's had just spectacular ski jump type chart. And so, you know, perhaps people are saying, I love precious metals, gold, I like it, I've got a big position in that. Palladium perhaps is not trading at a discount, but platinum is. Yeah. And they're both subject to, you know, many of these mines globally, there'll be platinum and palladium produced from these mines. And so they all are subject to the same, in my estimation, like real jurisdictional risk. Yep. And if you wanted to get upside, maybe platinum is a way to play. It's a third of the price of palladium. And yet they're both coming from the same place. So if there's a shutdown or a labor strike or a COVID scare, and a mine in South Africa or mines in South Africa shut down, or if there's saber rattling and the US and Russia just can't get along no matter what, and Russia produces about 40% of the world's PGM, so, you know, maybe these things are subject to a little bit of risk.
I mean, it seems like the U.S.-Russian relationship is already tip-top shape as it is, and
what could go wrong?
I can only imagine somehow between now and the election that'll just get stronger.
Yeah.
Jim, I have a question for you. You know, remember in 2008, gold goes from 1,000 to 700, silver drops from 21 to 9, and everyone said it was panic selling because the market was selling off, right? Which I
remember those times, yep.
Which I would personally dispute that rationale. I mean, I was fortunate to be able to talk with Bart Chilton, the former CFTC commissioner, before he passed away. A, the market was selling off long before that. B, I don't think it was a coincidence that you have central banks doing historic interest rate cuts as the mortgage market is collapsing. Then just coincidentally, the weekend that JP Morgan takes over Bear Stearns, Bart Chilton confirms they took over their metals book. They had a position that was over the allowed limit. He told them to reduce it. They came back, they made it larger. Silver drops from 21 to 9. Lehman fails. Oh, and on top of it, there was a physical silver shortage to the degree that several or at least one bullion dealer, Miles Franklin, thought they were going to go out of business because they couldn't source. So here's like things plummeting like a rock, but bullion dealers across the globe couldn't get physical silver, which I'm sure is all a coincidence that it happened within days of the JP Morgan deal. But I would be curious if you have any comment. What I found was interesting is that platinum's all-time high of $2,300 was 2 weeks before this deal. And from those Department of Justice confessions where JP Morgan just paid $920 million for manipulating the market, one of the confessions that came out last year, you know, they were cited for manipulating platinum and palladium too. Any thoughts on just the timing of that? Where, I mean, we've seen platinum at 2,300 before this deal, and that was before QE1, QE2, QE3, QE6, 7, 8, whatever we're up to now. And I mean, similar, I feel like we've seen it happen in palladium to some degree, but long question, but any thoughts on that? Because I know you've talked about, throughout our call today, like the dynamics of when you have a small market that's fragile and then you have massive dilution, in this case of the currency. It seems like some of these could be set for big movement, but what do you say?
I think platinum is set for big movement because I think that the big brother in terms of currency or fiat currency hedges would be gold, but I think there are a lot of investors who also would put platinum in that basket, possibly even before palladium. And so, despite the industrial uses being a little like I was surprised. I don't know. I don't know what will happen with auto sales. I continue to be mystified and in the dark in terms of what will happen at the end of 2020 and 2021, because a lot of the actual real consumption of palladium and platinum come from catalytic converters, so auto sales, new auto sales. But as far as an investment product, I would think platinum right now is the screaming buy. I don't know about manipulation. You and I have different ways of looking at the market, and so you have different expertise, and you're kind of moving in a direction which I don't know much about. But I do know that crazy things can happen in a market that is not transparent and totally liquid, and crazy things often do happen. So I don't dispute what you say. I just can't really comment on it with any authority.
Well, I appreciate that. And one thing we did find interesting here, looks like these platinum deliveries, JP Morgan customer account, taking some big chunks. So we'll keep an eye on that. Although, Jim, before we wrap up here, obviously you are with ValOre Metals, and you have a couple different projects there, then a little bit of diversification of the metals you're looking at. Fortunately, you stuck around to record a little profile about that. But can you give folks an idea of what we'll be talking about in there, and just some bullets so they know about the exposure and and see if that's a fit for their portfolio and what they're looking for?
Sure. If they follow the metals and they don't mind the risk associated with mineral exploration, and there's considerable risk with mineral exploration, I'm not going to dispute that. But what we're doing, we have a great team, very talented team in Brazil and also in Canada. And we have a project that we think has a lot of upside called Pedra Branca, which is a palladium and platinum project in northeastern Brazil. And basically, to break it down, we're just systematically answering questions. That's what we're doing. We're deploying our exploration expertise to answer questions. And what we hope the answers come back with are massive upside through exploration and discovery, and risk reduction in terms of understanding the ore bodies better. And the understanding will help us with the mining, the processing, the delivery, and the potential sales. And our group has had lots of experience in doing exactly this, taking a project, doing the exploration work, answering questions, and then being commercial enough to find a buyer that comes in and says, thanks for all your hard work. We'll take it from here.
Yep, that makes a lot of sense. And we'll dig into that a bit more, but real quick, can you give them the website and where they can find that?
Yeah, ValOreMetals.com, and you're looking at it right there. We're exploring for a modern world.
Well, fortunately, even a step better, you don't even have to type it in. It's in the description field below, and also coming your way now is a nice little overview of the company. So stick around, and I think you're going to like what you hear.